At Sierra, discover top workout gear at incredible prices, which might lead to another discovery. Your headphones haven't been connected this whole time. Awkward. Discover top brands at unexpectedly low prices. Sierra, let's get moving.
When did making plans get this complicated? It's time to streamline with WhatsApp, the secure messaging app that brings the whole group together. Use polls to settle dinner plans. Send event invites and pin messages so no one forgets Mom's 60th. And never miss a meme or milestone. All protected with end-to-end encryption. It's time for WhatsApp. Message privately with everyone. Learn more at whatsapp.com.
In case you were wondering, it is perfectly fine with Ed Zitron if you call him an AI hater.
I think so. I think considering I wrote the Hater's Guide, and when you type Hater's Guide into Google, it's one of the top 2 links, the thing I wrote.
Ed writes the newsletter, Where's Your Ed At? And has a podcast called Better Offline. He's a PR guy, but for the last few years has been really making a name for himself as someone who dislikes generative AI, especially large language models.
They are economically not feasible. They require stealing from millions of people. They require burning our environment. They're incredibly expensive and inefficient. And also, they have now become a load-bearing part of our economy without having any means of bailing out or going into the green at all. It's all very dangerous.
Yeah, not a fan. Which is exactly why we asked him on the show. And I want to be clear here. Ed doesn't hate all AI. But large language models like ChatGPT and Claude, he is out there shouting from the rooftops that all that money pumped into those companies has created a giant bubble. One he started warning about in 2024.
Indeed, I looked across pretty much every public company talking about AI. No one would talk about the revenue from AI. They kept talking about how big AI was, how important AI was, how many things AI could do, always could do, never what it did that day. But never, hey, we're making this much money. And then I started reading articles about it and the quotes, and all the quotes were really vague too. And it became really obvious that we were doing this again, this being another bubble, after the cryptocurrency one and the metaverse one. But this one was more egregious and was already at that point running away.
What kind of reactions did you get?
I did not get good ones. Pretty much the argument I got against me was, you are not being willing to accept that the future is here. You are not being open. Your mind is not open to the glory of AI and to the obvious future, and that it was inevitable that AI was coming. And people were quite pissy with me. People were genuinely, there were people who were saying I was being a crank, that I was just being a contrarian. I don't have the ability to be anything other than I am. So that really pissed me off.
The reason I wanted to talk to Ed now is that other people are also starting to use the B word. Some investors, a smattering of journalists, even, and it's debatable how seriously he meant it, Sam Altman. Let's say that this is a bubble that's on the verge of bursting in one way or another. If you're a normal person, not deeply steeped in following every move of every AI company, how should you think about this?
I don't know. That's the sad thing. I tried to warn people a year ago because the thing to do would have been, I don't know, start reevaluating NVIDIA, having a fair market understanding of the company, stop valuing the Magnificent Seven stocks at such a high growth rate, despite the fact that every bit of growth they've had is disconnected from AI.
The Magnificent Seven is an investor nickname for Alphabet, Amazon, Apple, Meta, Microsoft, NVIDIA, and Tesla.
We are at this point guaranteed to suffer. There is no avoiding this. I'm not a financial analyst. I'm not going to tell people what to do with their stocks, but it is inevitable that something happens now. And the longer this goes on, the worse it will be. The more cataclysmic it will be. I don't know what to tell people. I truly don't, other than you need to look at companies with fundamentally more logic and reasoning than we currently are, and our markets are disconnected from reality and rationality.
Today on the show, Ed's take on where we're at and what happens next. It's a little spicy. I'm Lizzie O'Leary, and you're listening to What Next TBD, a show about technology, power, and how the future will be determined. Stick around. This episode is brought to you by Saks Fifth Avenue. Saks Fifth Avenue makes it easy to get creative with your personal style and find the best arrivals for fall. Whether you're trying out the latest fashion trends or curating a closet that stands the test of time, Saks has you covered. Saks makes shopping feel personal. Their trusted in-store stylists are there to guide and inspire you, helping you find pieces that fit every aspect of your lifestyle. Prefer online shopping? Saks.com offers a curated selection tailored to your taste. From new arrivals by your favorite designers like Prada jackets and Gucci loafers to stylish pieces for your everyday needs. Whether it's date night, a vacation, a special occasion, or just lounging in style, Saks helps you find the perfect look for every occasion. If you want shopping to be fun and easy, then head to Saks Fifth Avenue for inspiring ways to elevate your personal style every day.
This episode is brought to you by State Farm. Checking off the boxes on your to-do list is a great feeling. And when it comes to checking off coverage, a State Farm agent can help you choose an option that's right for you. Whether you prefer talking in person, on the phone, or using the award-winning app, it's nice knowing you have help finding coverage that best fits your needs. Like a good neighbor, State Farm is there.
I want to start by helping our listeners understand the AI industry kind of as it currently stands.
Sure.
Let's start with the generative AI companies, since that is, I think, what most people are thinking of when they hear AI. Who are the big players we need to pay attention to?
So there are two, OpenAI and Anthropic. Now, it's much easier to think of these as outgrowths of Microsoft, Amazon, and Google.
Because that's where they get their money?
It's where they get everything. If you really look at this closely, all that the generative AI industry is magnificent seven companies like Microsoft, Amazon, and Google building things and sending themselves money. So OpenAI, principally funded by Microsoft. Microsoft runs all of their infrastructure. All those GPUs that are needed to run ChatGPT are owned by and run by Microsoft. While OpenAI is building more infrastructure, they're doing so dependent on venture capital. OpenAI has about 700 million weekly active users, though they failed to define what that means, and I question that number at its source. They're expecting to lose anywhere from $8 to $12 billion this year, and I think they're expected to burn $44 billion between now and 2030. They have no path to profitability. Anthropic, principally funded by Amazon and Google, with Amazon running most of their infrastructure. In fact, I think between Google and Amazon, they own like 30% of this company, which is wild. And in both of these cases, these companies lose billions of dollars. Anthropic has leaked that they will lose $3 billion this year. I don't think that's true. I think it's going to be more like $5 to $10 billion.
You think they're sort of softening things?
I am deeply suspicious of the numbers these companies leak. But nevertheless, the generative AI industry is effectively Anthropic and OpenAI. Neither of them are profitable. Both of them lose billions of dollars. Neither of them have a path to profitability. OpenAI is known for ChatGPT. Anthropic is known for Claude. And Claude Code being their coding platform.
Yes.
Now, in both of these companies' cases, they have a real problem in that their products do not really have firm use cases. They don't have the kind of mass market use cases that generate the returns they need. And that is continuing to be a problem because even in this massive 3-year hype cycle, even with all of these headlines and all of this money, most of this stuff comes down to generating text, summarizing text, generating images, looking at stuff, and generating what is most likely the thing the user might want, generating code, which costs an incredibly large amount of money, and also all of these things, problematically, are rife with hallucinations, which are when a model authoritatively states something that isn't true. This becomes a problem infrastructurally because every single time these models do anything, it costs quite a lot of money. It costs so much money, and indeed, Anthropic has a massive problem on their hands where users of their Claude Code, they have users who, even with rate limits, are costing them hundreds, thousands of dollars a month on a subscription that caps out at $200 a month. And there is no way to reverse this trend because nothing about generative AI maps onto a monthly fee. And there are economic problems at the center of this that are absolutely impossible to fix.
So here, I think, it might be time to talk about this report that recently came out of MIT that reviewed about 300 different AI initiatives and found that 95% of businesses are getting zero return from generative AI. I found that to be phenomenally striking.
Yeah.
And at the same time, many enterprises are rushing hard and spending lots of money to incorporate AI into all of their products. Why?
So that report is actually fascinating because, one, tons of outlets misreported it. They said that the problem with that 95% was that there was a learning gap. And they said that it was because this learning gap was the user could not understand it. No, the learning gap was between the models and the task. The models are incapable of learning because they're not conscious. And that report had one particularly fascinating little fact, which was people have been saying, oh, we're early. We're the early days. The early days, Liz, we got to be patient. No, actually, the report said that adoption is high, but disruption is low.
Yes.
This means everybody is trying it and it isn't bloody working. The frustration in my voice is that this is what I said a year ago. Everything that they said in here was exactly as I suspected because I actually talk to people that make these things and run these things and people that run businesses. And when you talk to them, there are either the fanatics who are just lying. They just lie because it's within their interest to lie, or the people really building stuff who go, yeah, you know, it's kind of useful, but I wouldn't build a whole company on it because I'd just lose a bunch of money.
I mean, it is interesting when you look into the innards of that report and you look at where generative AI investment went, sending outbound emails, personalized content. It's a lot of what I would think of as making Microsoft Outlook a little snazzier.
Yeah, pretty much. It's funny, you hear all these people claiming that, oh, everyone's using AI and it's changing everything. Then you actually hear what it does. It's like, oh, right. Yeah, you can summarize an email. You can draft an email. Don't know about you, Liz. I've never had trouble writing or reading an email, personally. Never really been an issue. They're usually short. I guess that there are people who might summarize documents with this, but are we really spending $400 billion in capital expenditures, which, by the way, is contributed more to GDP growth in the US in the first half of this year than all consumer spending combined? Are we really doing that to summarize emails or documents? Are we doing this to generate sexy Garfields? Like, what is it and that's the thing. When you really look at the things that these things do, and even on a business level that these things do, they're not exciting. They're not big. What is this changing? What is this disrupting? What is the thing that changes? And you could bring in code. You could say coding. I've yet to find an actual real person who can show me that they've replaced a coder with this. And also, we don't hire coders. We hired software engineers. Software engineers do more than write code.
Right. I mean, I will say that I have a sibling who is a front and back end developer who uses it to code, but he checks his code.
Right. It's not like you can just leave it to do the work.
The second stop on our road to bubble warning after the MIT report is an op-ed that Eric Schmidt co-authored in the New York Times. And Eric Schmidt, who's been an AI booster, and yet there is a line that is very striking where it was written, "It is uncertain how soon artificial general intelligence can be achieved." Which to me is a big whoa, because AGI, artificial general intelligence, is what the co-founders of OpenAI have always said they were pushing toward. They have told journalists early on that, you know, that was the thing, that was the lodestar. And to me, that is another flag of, hey, maybe this thing isn't doing what everybody said it was. I wonder how you read that piece.
I read it in the same way I've read everything Eric Schmidt has said for the last 10 years, by rolling my eyes. Back in April 2025, Eric Schmidt said that he believed in the next year the majority of programmers will be replaced by AI.
I know. So why the shift?
Lying. It really is that simple. They never believed it was possible in the beginning, and now it's become really obvious they are trying to backpedal. Sam Altman never thought AGI was possible, in my opinion. Can't prove it, but I don't know. Altman referred, Clamuel Altman, a couple weeks ago said that AGI was no longer a useful term. after saying a month before that, I believe, in one of his annoying, poorly written blogs, that superintelligence was in reach. Which is it, Sammy? And the answer is it isn't. It isn't. It's a fugazi. It's all just complete theater. And the media has fallen for it, hook, line, and sinker, again and again and again.
That really brings us to a fundamental economic question.
Mm-hmm.
You're essentially saying all of these guys are talking their books, a Wall Street term for, pumping up what you're selling. Let's talk about how these companies make money, or are supposed to make money, because you very clearly say not only are they not making money, they're losing money.
Yes.
If we take OpenAI, the bulk of their supposed revenue, they say they will do about $12 billion in business. Almost half of that comes from subscriptions. But you have a very interesting take on how they book that revenue, and I wonder if you could explain that.
So it's funny. I actually think it might be more than half of their revenue comes from subscriptions. And actually, I'm not really sure where all their revenue comes from. Everyone's been reporting, and there's this term annualized revenue that a lot of these companies use.
Explain that, please.
Happily. So what annualized revenue is meant to mean is month times 12. It is generally meant to refer to a calendar month. You generally have to report this bigger the company, the longer it takes, a month after it, because you need to let the books settle. This is standard. The reason they use this term annualized is because when you say the actual amounts, $13 billion in annualized revenue means $1 billion of revenue in a month. That's pretty good, right?
Yeah.
Here's the thing. How the hell are they at $1 billion of revenue a month? Because when you really break down the numbers, when you really take a look at the bits and pieces, things start getting a little weirder, because they report they have 20 million paying subscribers, 5 million paying business subscribers. 500,000 of those business subscribers are Cal State University, a $15 million one-year contract that works out at about $2.50 per user per month on a contract that is meant to be $35 per user. So they're just burning money there. Across the board, it isn't clear where OpenAI is making this money. I don't even think they're cooking the books. I really don't. I don't think that they're doing anything illegal per se, because this is not a public company, and thus they are not bound by accounting
Right, I think
standards.
that's important for listeners to understand, that if this were a public company, we could go to the SEC, we could read their filings, and we would have a much clearer understanding of the company's finances.
Yes, and that's the thing. They don't want that. The plan is somehow for this company to go public, which requires it to convert from a non-profit to a for-profit, which is a whole other thing. But if I don't believe their accounting is going to exist after the scrutiny of a real accountancy firm, a PwC would eat them for dinner. And this is the thing. This company has built this myth, this legend, that they're going to hit $12.7 billion of revenue this year. How much are they going to lose? Well, we don't really know. They've leaked that they will lose $8 billion, but they lost $5 billion last year, so I think it'll be more like $12 to $15 billion they lose this year. I'm throwing a lot of numbers at you, but it comes down to something quite simple, which is they do not appear to have the means to charge enough money to actually go into the green. And I think it's because they would need to charge at minimum $50 per user per month without fail. And I think right now they're doing the literal opposite. I have evidence that they are, evidence being my own experience and tons of Redditors, that if you click the right buttons, you can make OpenAI give you 3 months of half off the $20 a month rate. They are also, to some subscribers, and I'm seeing this in a lot of places, offering 1 month of their team subscription for $1. How many of those paying subscribers are these? How many of those paying subscribers, those 5 million business subscribers, have paid OpenAI $1 once? We do not know, and the media does not ask these questions, and we actually can't find out because they're not public. What I fear is that things are much worse at OpenAI and Anthropic than we currently know. If I'm wrong, and they're exactly what they're saying, they're still in trouble because they're still losing billions of dollars. It's bad either way.
When we come back. So, okay, bubbles pop. What would that look like in this case?
Running a business comes with a lot of what-ifs. But luckily, there's a simple answer to them. Shopify. It's the commerce platform behind millions of businesses, including Thrive Cosmetics and Momofuku, and it'll help you with everything you need. From website design and marketing to boosting sales and expanding operations, Shopify can get the job done and make your dream a reality. Turn those what-ifs into... Sign up for your $1 per month trial at shopify.com/special offer.
This episode is brought to you by Indeed. When your computer breaks, you don't wait for it to magically start working again. You fix the problem. So why wait to hire the people your company desperately needs? Use Indeed's sponsored jobs to hire top talent fast. And even better, you only pay for results. There's no need to wait. Speed up your hiring with a $75 sponsored job credit at Indeed.com/podcast. Terms and conditions apply.
Lowe's knows you've got a job to do, and we help get it done. With the MyLowe's Pro Rewards program, eligible members save more with volume discounts on qualifying orders through a quote of $2,000 or more. Join for free today. Lowe's, we help, you save. Offer can't be combined with any other discount, contract, and/or special pricing. Exclusions, more terms, and restrictions apply. Details at lowes.com/terms. Subject to change.
If you were my age, almost 50, you remember when the dot-com bubble burst. Price-to-earnings ratios on tech stocks had soared to crazy levels. Pets.com was a household name. Companies were spending gobs of money. But then, crucially, they started running out of it. The government then won its case against Microsoft, and the Fed began raising interest rates. All of a sudden, tech didn't look so hot anymore. Ed argues that something similar is happening now, and he says OpenAI is the canary in the bubble coal mine.
OpenAI raised, they raised they've raised $18.3 billion this year. They're meant to receive another $20 billion by the end of the year. But to do that, they need to convert and this is a very simplified version, they need to convert from a non-profit to a for-profit entity.
Long story short, OpenAI began as a nonprofit. Then it started a for-profit arm. In May, the company transitioned to a public benefit corporate structure.
Now, they need to convert by the end of the year. Otherwise, SoftBank, who is the one handling their $40 billion round, which is not fully raised, just to be clear, cuts their round in half if they don't convert by the end of December 31st, 2025. Standing in the way of that is Microsoft. Microsoft, in their investment, has access to all of OpenAI's IP, all of their research, and has exclusive rights to sell their models and gets a 20% revenue cut from everything OpenAI does. If OpenAI cannot convert by the end of the year, they don't get a bunch of that money.
Convert to a for-profit.
Indeed. And if they don't by the end of the year, SoftBank likely cuts the round in half. Even if they do get that money somehow by raising from other venture capitalists, if they cannot convert to a for-profit, which may not be possible, this is very important, they will die. They cannot survive as a non-profit because effectively they would become a Ponzi scheme. They would be a scheme where they burn money, people invest into them, and the only way to get liquidity, which is the term for when you sell your stock in a company, would be to sell it to someone else. And quite frankly, why would an investor invest in a company which really has no liquidity event in front of it? OpenAI, if they cannot convert, will die. And OpenAI is effectively the AI industry.
So that brings me, I guess, to sort of 3 points that I want to put to you in varying orders. So the first one is what I would call the Uber hypothesis, which is, okay, so this thing has been subsidized by investors. It's not quite a one-to-one because Uber was also subsidized by a very, very free interest rate environment, right? But the idea that we need a little time, we'll work the kinks out, and we'll come up with a profitable business.
Mm-hmm.
I know you think that's bull. Tell me why. Well,
very important place to start. Uber, in its entire lifetime, so over 10 years, over a decade, burned about $25-30 billion total. And a lot of that was in marketing. You remember Groupon? Groupon did the same thing. They burned all of this money to market their service and eventually had no way of turning things profitable. Uber, same deal. Uber, however, had a business that made sense. There was a way to make this profitable. It still burns a bunch of cash because the cost of customer acquisition is incredibly high. The cost of running the service was not. The actual internal costs of running Uber are expensive because it's an at-scale company, but the infrastructure costs were not. The big mistake that people make with the Uber comparison is just saying, Uber burned 25 to 30 billion, so it can't be that bad for these companies. No. It's actually so much worse. People are missing something, and that's how much...
Because the compute costs so much?
Because of the infrastructure to provide the compute. No one sees, and no one wants to admit, that Microsoft and Amazon and Google as well, between them, have probably put $250 billion just into the infrastructure to run OpenAI and Anthropic. And those numbers are never included in the evaluation of these companies. On top of that, OpenAI, when they closed this round, has raised like $60-70 billion. And on top of that, Anthropic's, 30-40 billion at this point. So instead, they've burned like 10 times what Uber burned in 10 years in 3. And I actually think my CapEx estimate is somewhat low. On top of that, the internal fuel of AI, running a GPU on an hourly basis, may not be profitable. Semi-Analysis, which is a big, expensive $500 newsletter, you look at them and they say, yeah, for hyperscalers, it's about $1.76 an hour to run the average GPU. To turn the green on that, you need to be running them at 80% utilization for 3 years, and that's to just break even. Here's the crazy thing. This would be if like Uber cars all took $50,000 of fuel a month. It is that ridiculous. It is that different. And there is no knob to turn these profitable.
I want to talk about but AI works in some areas, in medicine, in research, in the fact that, my oncologist could make this incredible model of my tumor before they cut it out of me. Like, that stuff is amazing. And so that's where I wonder, that's where I have some pause.
Sure, but that thing you just described doesn't exist. There are machine learning models that are doing incredible things in the sciences. Those are not large language models, and people like Sam Altman love to conflate them. And so you get these situations where, and I'm not critiquing you, I'm just saying, yeah, if they could do that, that would be great. That isn't what they're doing. The way that way that AI is being used within healthcare, for example, is as a scribe thing. Like a bridge, very big company for taking notes from doctors. And yes, the administrative burden is a huge thing, and it's good to reduce that. I'm not getting that wrong. But again, we're talking about something that hyperscalers are going to spend $400 billion this year building out. And the actual use cases are nowhere near that kind of thing. The actual use cases are nowhere near the myth. The myth is what's used to sell it. And so people will say, well, they're getting exponentially better. And the reason they say that is because these things are improving on benchmarks that are specifically built for large language models. These things are not getting better at actual use cases that would change the world. The actual use cases of generative AI are fairly similar to where they were 6 to 12 months ago. In fact, the only thing that's really changed is the launch of reasoning models at the end of last year. And those have increased the costs of LLMs significantly, while not really creating any new use cases.
Now, let's talk about where politics comes into the picture.
Right.
And not just politics, but as we have seen in the U.S. government starting to take cuts of tech company deals, talking about NVIDIA sales to China and whatever the heck it's doing at Intel, there is a question to me as to whether the Trump administration in particular is going to attempt to think of these companies as too big to fail.
If OpenAI disappeared tomorrow, nothing would change. Legitimately, I don't think anything would change. Like, yeah, there would be news outlets would have to find something else to lie about, but I mean, I'm sure they could find something. These companies are not essential. Their outcomes are not essential. And indeed, their involvement in government doesn't make them essential at all. If these things fail, there isn't really an obvious thing that changes. It isn't something that would affect the market other than the fact the myth will die. And even that's going to happen either way. Or I guess people won't want to buy as many GPUs. To be clear, the only possible too big to fail-ish thing they could do would be to permanently subsidize every AI company and every single purchaser of GPUs and effectively nationalize NVIDIA. This isn't going to happen. You can't bail this out because in the too big to fail example of the past, something would fail and you could plug that with money, TARP. So you'd have a fund that would fund that. And then there would be an endpoint to that funding. There isn't such a thing for this. There isn't anything to bail out. Microsoft, Google, Amazon, Meta, they're going to be fine. Their data centers could all melt tomorrow. Not all of them, but the GPU ones, they'll still make a bunch of money from Microsoft 365 or advertisements on Facebook or what have you. There is no way you can plug the gap. If OpenAI fails, there'll be people who lose money, but that's not something where you can just give a bunch of money. These services are not essential. And these businesses are not large parts of our economy. From what I can tell, the combined revenue of every single AI company, including the revenues from companies like Microsoft and Amazon and Google, is like $35 to $40 billion, which is about how much smartwatches made last year. It's very loud. It's kind of like the MIT study. Lots of adoption, not much disruption.
So why are people listening now?
I think because the time has run out. Nothing has changed. Nothing has happened. And the costs have gone up. And we now have, thanks to people like Paul Kodrowski and Christopher Mims at the Wall Street Journal, real insight into the rotten economics beneath. And on top of that, I think people have just been using these things for long enough to go, all right, when's the thing I was meant to be exciting by happening?
So let's say this bubble does burst. What does that mean for a casual user of these products or even a non-user of the products? Because generally, companies don't explode without some kind of follow-on consequence.
So pretty much, I believe that ChatGPT.com will forward to Copilot. I think Microsoft will just absorb OpenAI into its body. Like just whoop, in it goes. And I think that the version of ChatGPT you see today will be dramatically different in the sense that it will be so heavily rate limited that you'll be able to use it a couple times a day. I think subscriptions to these products will shoot up to 50, 100, 250 a month just to start, if not more, because the economics underlying them are so bad. So very bad. I don't think people truly know yet, because we don't have the underlying accounting, how bad this will be. But everything I'm seeing suggests that this is the single most aggressive burn rate on software ever made. I think a lot of these products will simply cease to be.
Will you take a victory lap?
I don't know. I think when OpenAI dies, I might pop some champagne, smoke a big cigar. But I don't think it's going to be that clean. I think there could be a chance that whatever my editor, Matt Hughes, he had the idea that OpenAI will exist as a PO box that sues people. It's like a patent troll. But I think that the collapse of one of those companies will be a moment, I don't know, to celebrate, because real people are going to lose money. There are going to be actual economic consequences here. Nevertheless, the celebration I have will be to say to people, you should have listened earlier. The harm could have been reduced. And perhaps there are people that I will name that were principally responsible for spreading the myth. And those people must be held accountable. I think there are members of the media who will be held accountable. But the big thing I will want to say is that the amount of the many people I hear from that say, I feel like I'm being gaslit, I think those people will feel vindicated for believing their eyes, for believing what they felt when they used these products was real versus everyone telling them otherwise.
Ed Zitron, thank you so much for coming on.
Thank you for having me. It's been wonderful.
Ed Zitron writes the newsletter Where's Your Ed At? And hosts the podcast Better Offline. All right, that is it for our show today. What Next TBD is produced by Evan Campbell and Patrick Fort. Our show is edited by Paige Osborne. Mia Lobel is the executive producer here at Slate, and TBD is part of the larger What Next family. And if you're looking for even more Slate podcasts to listen to, head on over to our Plus feed, which is exclusively for Slate Plus subscribers. We have a new episode of The Discourse out today, where Slate writer Nitish Pawa and I discuss the outcome of the landmark Google antitrust case, the search one, and the government's remedy. All right, we'll be back on Sunday with another episode. I'm Lizzie O'Leary. Thanks for listening. This episode is brought to you by Saks Fifth Avenue. Saks Fifth Avenue makes it easy to get creative with your personal style and find the best arrivals for fall. Whether you're trying out the latest fashion trends or curating a closet that stands the test of time, Saks has you covered. Saks makes shopping feel personal. Their trusted in-store stylists are there to guide and inspire you, helping you find pieces that fit every aspect of your lifestyle. Prefer online shopping? Saks.com offers a curated selection tailored to your taste. From new arrivals by your favorite designers like Prada jackets and Gucci loafers to stylish pieces for your everyday needs. Whether it's date night, a vacation, a special occasion, or just lounging in style, Saks helps you find the perfect look for every occasion. If you want shopping to be fun and easy, then head to Saks Fifth Avenue for inspiring ways to elevate your personal style every day.
Listen. That's the sound of the fully electric Audi Q6 e-tron. The sound of captivating electric performance, dynamic drive, and the quiet confidence of ultra-smooth handling. The elevated interior reminds you this is more than an EV. This is electric performance, redefined. The fully electric Audi Q6 e-tron.